And just like that, all is good in the markets again. It seems like the Dow up over 600, S&P's up over 60, NASDAQ rallying into the close up about 0.6%, and the S&P had been down about 0.7% earlier. The NASDAQ had been down more than 1%. And for the month of November, the markets are clawing their way back with losses only now about 1% in the S&P. The NASDAQ is still down about 3%. Dow a little less than 1%, but momentum now on expectations of a Fed rate cut. That's now 85% probability. Last week, that was 40%. And that is really reflected most in the small cap stocks. Look at the Russell. That's rallied about 7% since last week. Also, expectations that Kevin Hassett is being considered as the front runner to become the next Fed chair. That has definitely helped the narrative of potential lower rates. Seeing big moves in the AI space as Alphabet soared to new highs on competition with NVIDIA. Earlier this morning, the Conference Board Index for November dropped almost 7 points to 88.7. That's its lowest reading since April. The U.S. labor market showing further signs of weakening as the pace of layoffs has picked up over the last month, according to ADP. So what we're seeing is private companies lost an average of about 13,500 jobs a week over the last month, according to ADP. And that's an acceleration from the 2,500 jobs a week lost in the last update that we got. Retail sales only rose 0.2% in September. That slowed from 0.6% in August. Now, in the equity option data space, yesterday, ES put volume, boy, that ratcheted higher up. 71% of all the volume were puts. Today's expiring 67 and a quarter and 6,700 puts. Very, very active, as well as today's 6,775 calls. Tomorrow's 6,800 calls. Friday's 6,700 puts. Very, very active today. At the money implied volatility for Friday now below 10%. And in the crypto space, there was some momentum there because of the, all the talk of a possible Fed rate cut, but Bitcoin did hit a low again of about 86,000, Ether down to 2855, MET volume almost 150,000 contracts at CME today.